Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX. This is today's European Session Outlook, and we had an extremely volatile trading week for the whole week. We'll start with the North American markets. Yesterday, the US economy looks much more vigorous in the second quarter than previously thought, as a report released Thursday showed businesses got off the sidelines and spent some money. Because the GDP annualized came out 0.5 better than expected at 3.7%. The GDP price index for the second quarter 0.1% better than expected at 2.1%. The personal consumption expenditures prices quarter on quarter were as expected, as well as the core personal consumption expenditures quarter on quarter. We had the initial and continuing jobless claims come out 3,000 better than expected and 19,000 worse than expected. US stocks rallied to close near their intraday highs for a second straight session Thursday, as China showed signs that measures to stabilize its economy and stock market may be taking hold. In afternoon trade, stocks made a dramatic turn lower, but stormed back in the final hour of trading, repeating a pattern of roller coaster activity that has come to be a trademark of the past several sessions. The Dow Jones was 35 points up, and the Nasdaq was 107 points up. The Dixie Index is up to 95.66 from 94.04 yesterday. The biggest mover was the USD versus the Swiss franc. It was 130 pips up. The Jackson Hole Symposium is continuing today. We'll have a speech about that on Saturday. Tier 2 news for today is core personal consumption expenditure price index year on year and personal income month on month, as well as Reuters Michigan Consumer Sentiment Index. We'll be expecting the NFP data next week. That's always an exciting piece of news. Onto the EU markets. The Swiss industrial production came out negative. We also had the EU money supply year on year, which came out 5.3%. This is above the expectations of 5%. And we had the Spanish GDP year on year at 3.1% compared to 2.7%, so we have some growth there. Private consumption and investments are what pushed the Swiss GDP data today to 1.2%, which is 0.3% better than expected. The European equity futures pointed to a marginally higher open for stock markets on Friday, capping a whirlwind week for global markets that saw Europe entirely recover from a bruising 8% correction driven by worries over China's economic slowdown. German DAX futures were up 0.1% and French CAC 40 were up 0.3%. Tsipras ruled out coalition with pro-European parties for the election in Greece next month. And today, from the Eurozone, we'll be waiting for many confidence indicators. We have the economic sentiment indicator for August, business climate for August, industrial confidence again for August. Everything is for August today. Consumer confidence, and the services sentiment as well. Traders will be looking forward to a strong trading week for the euro next week, as we await many Tier 1 news every day of the week. On Monday, we have EU CPI and German retail sales. On Tuesdays, we have EU and German market services PMI and German unemployment rate. On Wednesday, we have EU Producer Price Index. Thursday, we have ECB interest rate decision and press conference. And to cap it all off, on Friday, we have the Eurozone GDP. This information will let us know the general direction of the euro and send us clues about the extra quantitative easing the central bank is considering. In the UK, stocks in the UK ended sharply higher Thursday, as shares of commodity producers led a rally that's helped the benchmark FTSE 100 to recover from a sharp sell-off at the start of the week. The FTSE 100 jumped 212.83 points, or 3.6%, to 6,192, marking the biggest percentage gain since October 2011. The pound, meanwhile, briefly fell below 154 during the session, before recovering back above that level later, as the bigger than expected 3.7 rate of US GDP expansion pushed the US dollar higher against its rival. In about 1 hour, we'll be expecting the gross domestic product data for the UK, and tomorrow we'll be expecting Mark Carney's speech. He has been quite hawkish so far during previous speeches. In Asia, in Japan, the inflationary data fell dramatically short of what's expected. It came out 0.2%, which is a little bit hovering around above the 0%. Japan, as we know, are trying to have this rise to 2%, so they're far away from that. The New Zealand dollar extends gains versus the US dollar for the second straight session on Friday, as the Kiwi bulls seem to be rejoicing the overnight recovery in oil and gold prices. Australian dollar bulls have picked up as the price continues to rise in a more upbeat market, as investors get behind opportunities in rising commodities and stocks. However, the risk ahead lies with speculation around the Fed and the potential rate hike. It's rather unclear if the Royal Bank of Australia should to adopt an easing policy, given that Australian US dollar is trading below forecast. Quarter 3 inflation report is a more likely trigger for the rate cut. In commodities, gold futures registered a fourth straight day of losses, settling lower as a stronger dollar and a rally in global markets dulled the metal's investment appeal. Gold has lost a total of 3.2% from Friday's settlement of 1,159.60. Oil rallied 10% up for biggest one-day rise since 2009. WTI crude added to already large gains following a report that Venezuela asked the Organization of Petroleum Exporting Countries to hold an emergency meeting. They will discuss a possible production cut to help stem the recent drop in oil prices. The oil movement was $3.30 up. Alright, that's everything major for today. Thank you for the attention. I'll see you next time. Goodbye.